Good afternoon, Ken Long from Tortoise Capital Management with a look at our 7-day down pattern in UNH, which we framed at great length yesterday. Our final frame for the daily basis mechanical strategy was right here. We were looking at a mechanical entry at 26.5 with as much as $1 trailing stop. We said yesterday we're willing to buy tactical momentum anywhere in this zone if we saw strength in SPY in order to improve our initial entry and cost per share. And that's what we saw today. You may recall this intraday look on 5-minute charts where we saw the declining slope of the sell-offs, and then yesterday a powerful move into the close, and we saw 26 as a key level. On a daily basis, what we saw today then was the 7 days down, and now here's our universal entry, red candle, with a white candle that opens inside the body of the red candle, takes out the high, and there's a mechanical entry right around 26.5. And so on a daily basis with mechanical entries, that would be the initial position with an entry 26.5 and a stop down around 25.5 or $1 trailing stop. But here's what you can do intraday if you have time and a little bit of patience. Now here's, I've added a 4th day now, so this is today's pricing data. And this green line is that is right at the 26 level where it closed yesterday. And what we said was we'd be willing to buy tactical momentum anywhere between 25.5 and 26.5. So the market gapped up hard and took off, but UNH was unable to do anything except sell off like it has been in the previous 7 days until right around lunchtime when the range got very narrow and SPY started another surge and UNH started to take off too. Well, we actually gave it some room here, and we ended up, this is where we started stalking on the blue line. This was our initial stop loss, about 15 cents. Entry here at 26.2. About 30 minutes of open risk, 40 minutes of open risk. We moved to no lose at this yellowish golden line here. It continued to move sharply up around north of 26.6, started to roll over. Felt like that was a pretty decent intraday trade for 2R. So we went ahead and cashed 2R. It stabilized in this area around 26.5, brings us back to looking at this position. So if you're holding it overnight with $1 stop loss, you're in pretty good shape. You still have quite a bit of room to make up, even just on a normal retracement. There's another $1 in here to 27.5. That's not bad. So that's a look at the 7-day down pattern, how you play it on a mechanical basis with end-of-day data and mechanical entries with wider stops, and then what you can do on shorter-term intraday trading and capture some of those pieces. It would have been perfectly acceptable, for instance, to sell a portion and cash 80% of the shares at the 2R, and then use 1/5 of your shares and decide that you're going to just hold that overnight as part of the 7-day down mechanical entry. And that's not a bad way to continue to participate using that 1/5 position. Let's say you were going to go 1,000 shares on this. You could use 1,000 intraday, cash 800 of them at 2R, keep 200, and then now you have a wider stop for overnight, and you're still ringing the bell, but you're allowing it to participate in overnight moves. And the pattern on this one looks pretty good. There's some evidence beginning to mount that this was a local minimum here, a intermediate swing low. And for that sense, now with 2 strong closes in a row, this is more reasonable to hold this overnight. But you can engineer a pretty tight stop here with 15 cents, whereas overnight you probably want somewhere around 75 cents or $1 based on our previous analysis. So that's the 7-day down pattern in UNH. Thanks for your attention.